Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is 6:42 a.m. on Tuesday, May 10th, as I'm starting the video. And as always, please run your player at 1.5x. Let's take a quick look at futures. Bitcoin up 2%, oil down 2%. Nat gas down 2%. Still, the narrative has flipped from supply side shortages to demand worries with China locked down and no end in sight. Precious metals are flat. Stocks put in an overnight rally, fluctuating here pre-market. About 1% for SPY and small caps, about 1.4% the last time I looked for the NASDAQ. On the macro front, we've got that NFIB Small Business Optimism Survey, and the last time they reported that, it was the worst they'd ever recorded in 50 years of doing the survey. So it'll be interesting to see what, I guess it can get worse, but see if it gets better. The big thing on the board is the CPI tomorrow. And that's one thing I'm going to be watching today on this emerging overnight rally. Can they build on that? Are there going to be people that want to step in before that pre-market release of CPI tomorrow? I don't know. So, but that is a big number. Certainly a number that could move the markets for sure. Earnings front. Before the bell, I was seeing I see Peloton on the board, Norwegian Cruise Lines. Then we got a bunch after the bell: SoFi, Roblox, The Trade Desk, Coin, Unity, Win, Rocket Mortgage, and Oxy. Also, there were a lot of overnight movers last night. We had talked about Upstart, down 48% this morning. I mean, literally cut in half. Linda in the trading room took a shot at that, so congratulations to her. If any of you out there ended up playing that, congratulations to you as well. We also, yesterday morning before the bell, talked about Affirmed in the same space as Upstart. It was down 17% just yesterday during the regular session, and then tacked on another 12% in sympathy with the Upstart earnings. So just, if you had got in, taken the initiative yesterday morning and did something with Affirmed, I mean, you're up 30% already on your short. Congratulations if you did that. It kind of pays for the subscription, right? So that's not all bad. GoodRx, GDRX, down 40% this morning. Novavax, NVAX, down 20%. Car Gurus, down 20%. So a lot of movers overnight. If this pre-market rally falls apart, or you watch those names, the general tendency is these overnight losers, the ones that get punished, keep on going. So don't think that, okay, it's down 20%. That's it. They might sell it down another 10 or 20% today based on those earnings and just based on market conditions. So you might be able to get a runner after the fact. So if that's something that you're interested in, please take a look at it. Now, moving on to the charts. Last night I did a little recap. If you missed that, you can find that on the YouTube channel. But there we talked about the oscillators being stretched to the downside, minus 60. Normally, in recent memory, in bull market conditions, you could be looking for, okay, eject all your shorts, get long for the bounce. That has worked great in these recent times. Yes, we've had some extended sell-offs. This was the February low. We had a Thanksgiving run down here to minus 90, where we got the bounce back. Now, the thing we're going to have to figure out today is this little 1%, is it going to turn into 4% by 4 o'clock? Or when the big players step on the field at 9:30, do they view that 1% as free money and start selling it down again? So we're gonna have to wait and see on that. Jury's still out. Here's the NYMO, same kind of level, minus 65. Last night we spent a little bit of time looking at the VIX, the characteristics over the last 4 years of the characteristics when you get a big tradable bottom. And I laid out a little case where I wanted to see, you don't always get what you want, but thinking this VIX would spike on a capitulation type sell-off where we would know the bottom was in. So remains to be seen. Bitcoin is up 2% today, so holding the line here on this trend line and broken support of a prior trading range really needs to hold in here the balance of the week. I'm looking here and I already see something a little bit messed up, but we'll work through it. SPY 60-minute chart. You can see we closed pretty near the lows yesterday, down here around 398. We broke that 400. I think this morning 400 is going to be a nice level, if you will, just as a simple toggle. If we open above that and then can hold it this morning, and you want to try a long against that level and say, okay, we're green, and as long as it holds 400, I can't really get hurt. But if you were to be watching and you're an active trader during the day, intraday trader, you see a break above 401, 402, and then they roll it over and lose that 400 level again, losing a well-defined, that's a big psychological level at 400. If they roll it over from there, then that would be a nice objective short for a continued downside move. And so if you were long against 400 and they built on it, you see we've got an opening gap from yesterday morning that comes in at 406.41, and that would be your upside target for a long. So, if they build on that, get back up to the gap, and then of course the potential for a gap fill later on in the week. So let me see if I can find, I had misplaced my daily chart here on SPY, see if I can find it. Yeah, there it is. I don't have the gap marked in here, but what you can see is we've got that big down candle yesterday, and we took out the lows of last week here at 405, and then that would be where more or less round numbers. That's where your gap is above. So I think, getting up to that 405 level, it's been a while, but talking about recapturing a breakdown candle is an important technical move. So what could happen is, just playing out scenarios, a rally back to 405 at the top of this breakdown candle, which would be the bottom of the gap, and then have that be rejected there, and a recapture of the breakdown candle and a move into the gap would be certainly be bullish. You'll have to decide this morning. Like I told you, I went home short last night, so there's my palms are a little bit sweaty in terms of how long do I want to hold those, if the rally keeps building. So we'll just have to see. I mean, it's going to be a game time decision. But remember that this 411 area would be your next 410, 411 would be a big, big line of resistance here at these lows, at the February low. That 411 is going to be a big level on your chart as far as if the bulls could recapture that would be huge, and that would be another place where you would want to have that marked on your chart. Also, keep in mind that you've got the diving exponential moving averages, and this 8 day in pink here is going to be moving really, really fast. So this is going to be coming down, and then that'll also be a layer of resistance on the way back up. Moving on to the Qs, daily chart made a new low, came down to this 298 level. There was a gap in here that I removed. It was filled. So now, as we look to today, you're going to have a level right here about 302.50, 303 type area, the top of this breakdown candle. And then we're going to have the Friday close at 310 as the next level above for potential topside resistance. If they can recapture 310, then the next objective would be this really, really big resistance zone between 317.35 and 322. So those would be your upside objectives in my mind for a bounce. 303, 310, and 317.35. You could certainly see a scenario where everything got all bullish. There was some kind of news tomorrow on the CPI that gave everybody encouragement. Maybe it went down a lot, and so you'd have a breakdown, a 20-point rally, bring that up to 317, 320, something like that, and then that would be a big decision point. And then you could see a breakdown, back test, and then roll over, or breakdown, test this resistance area, and then break out. I'm still leaning lower for longer, but you got to go level to level, and you can't just if you had missed this down move and price were to rally all the way back up into this heavy resistance zone, I can tell you that would be an objective area to short with, just put your stop just above, and if they take it out, they take it out. But chances are, back testing, a February, March low, and then all this resistance here, that's gonna be a wall. I mean, if the bulls can break through that, then they probably got something really, really cooking. But I would have my doubts heading into that level whether they could do it. You're just playing the odds. Here's the 1 hour channel down. Not a lot of monumental information to add. You can see that 310 level is an important level. You could certainly see a move from the bottom of the channel to the top of the channel, right? See it all the time. Top, bottom, top, bottom, top. So, I mean, that's what channels do. So we're at the bottom of the channel. A move back up to the top of the channel would be at 310. Back test this resistance level and the top of the channel, and then move back down. So we'll have to see if they can rally price up to that 310 level, and then find out what happens there. Bad day at the office for IWM. I mean, it was literally straight down all day, 4%. Here again, we've got that situation where we closed on the dead lows down here at 175, and the top of the breakdown candle is all the way up here at 180. So I would say that would be your first resistance level. And then you've got a downtrend line that comes in, well, it's way over here, so it's not going to meet that immediately. If you got a breakout above 180 and you had gotten, whether you took home a long last night or you get long at any point, during this morning, if it's relatively close, you can be long against 175 if you think there's going to be, a sustained rally. And then if you got a breakout above 180, then you can move everything up. Move up your stops, move up your strikes, and then you can be looking for higher ground above 180. And then, just like we talked about on the other indexes, if there's a rally, if they rally this up above 180 and then roll it over, then you can, get short again. But you can see here on this 60-minute chart, I've got this, it's kind of more like a wedge than a channel, but we undercut the low side. There's a lot of possibilities. I'll just give you a couple. One, breakdown, back test this 180, the bottom side of this down wedge, and get rejected there, or a breakout, get back into this wedge and have a big rally that would take you up to the top of the wedge. Kind of hard to see that happening. That would, remember, the bottom of our big trading range is here at 187.50. So that's going to be a massive wall, and then that's right in this area here, 187.50, 188. You can see all the trading that's gone on here. You've got a larger volume over price bar, so hard to imagine, a breakout above that level. I mean, if it happens, it happens. That would definitely be bullish, but your main focus today should be at 180. Can it break above and make some progress, or does it roll over? Facebook, I've been messing around with a short on this one from up here I mean, it was down 4%, but not without. I mean, you can see all of these wicks reaching up high and ultimately selling off. So hasn't been as smooth as I'd hoped, but it's going in the right direction. Basically, what I've been thinking is that it would at least come down and test the top of this box, and then with any luck, if you're short, you're talking your book. With any luck, break into this big $20 wide gap and fill it on some type of panic move. So we'll wait to see if that happens. Now today, on this whatever rally, you've got a line here at 195, and if you were watching it, you can be long against 195, or just use that as your pivot point, and you get a break below 195, you're almost assured of going down to touch the top of the gap. That's only $2.50. But if you think it's going to enter that gap, then that's the money-making trade on Facebook. Apple down 3%. Gap in the chart that I've marked for you broke below this 153.5 and spent most of the day toggling between 150 and 153.50. I think the next big level below is this 150.5 type area that will open up more downside. The most important thing I think on Apple is it lost the 200. It lost this trend line, and it lost lateral support. So if you were a bull, that's got to be really, really disappointing news to lose that triple layer of support. And you can see how important this 150.5 is. That was a spike low area in March that ultimately held. It lost the 200 for a day or so, jumped right back above, and nearly got back to the highs. And then the February low was right at that 150.5. You can see there was some resistance back here and some resistance back here. So that's a big line, that 150.5. And if you were to break below that, then you could lose $8 to $10 pretty fast down to this bottom of this value range. So even if you haven't messed around with Apple at all, if you have any interest at all, I would be alarming that 151, 150 area. Set yourself an alarm at a level where you'd want to engage it on the short side, because this is kind of like the last stop at these upper echelon levels. You break below that, and I think you're coming down pretty quickly. Bad day at the office for Tesla. 9%. Gap down, cut through these support levels that we had marked, closing almost directly on the lows. If we go out to the daily chart, you see the big gap down in the charts here, big mark on the chart. Really, the thing to focus on now is these lows. You got a March low at 760, and you got a February low at 700. Whether it bounces first, you got the levels there. 825 was a recent low. That would be an important level to capture. You've got the top of the breakdown candle, and on the 60-minute chart, I've got the gap there for you. So that would be, upside targets, and you've got a down channel. So if it can gather itself here, a chance to come up and fill the gap, hit the moving averages that are dropping, and the downtrend line, get rejected there and come on back down. But notice, decisively lost the 200 EMA. So now price is below everything, below trend, below all the moving averages. The only thing left are the March and February lows. So really important for the retail traders to hold that one up. Microsoft down 3.7%, gap down, finished right on the lows. You've got, there was a lot of consolidation yesterday. It was really, if you go down on a 5-minute chart, man, that thing was volatile yesterday. 5-minute bars that were $2 wide. Really, really volatile. Anyways, you got a level here at 264, and you've got a level here at 267. That was more or less the trading range yesterday. You get a breakout above that level, you can get some running room to the upside. If you lose 264, I think it's going lower. You see it real clearly on this daily chart, and I want you to take note of this 270 level. Why? That was the low on Friday. That was the low most recently. That was the March low. You had a look down in February to 270, and now we are below it. So if you got a kickback rally to 270 and you saw a stall there, that would be, in my opinion, a great place to engage Microsoft on the short side right here at 270, because you got a lot of reaction lows along that line, and it's going to be an important level. On the long side, if you're a bull, or if this rally has legs and you get a break above 270 that holds, then I think it's a good long, because you would have recaptured all these reaction lows. And then, support is support until broken, and then it becomes resistance. So if you are able to break out of resistance at 270, then that'll again become support. So really important line there on Microsoft. Amazon, bad day at the office, another 5%. I mean, this thing is just in liquidation mode. It's got to recover 2,300 before anybody can even think about, bounce back type rally. You can see that there were a number of weeks back here where 2,300 acted as support. Really the only place in this whole run where there was any kind of consolidation. And so now we're below it. So until price can get back above 2,300, and really this 2450 area, the path of least resistance is still down. So not going to get into the 60-minute charts, but that 2,300 is your key pivot across a lot of time frames. Google actually outperformed yesterday. It was down 2.8%. We talked about the bottom of this trading range, and here we sit right at 2250. Perfect pivot level. If it can hold it, got a chance to come up here. You've got a downtrend line that might pose resistance, but your upside target will be the original bracket level at 23.25. If it breaks above that, then you've got the top of this trading range here at 23.75-ish. So those are your upside targets. If you lose 22.50, then it's obviously going to be going lower. We've talked about that. You got a target down here at 2200 for starters. Netflix just keeps leaking. You're probably either in it or ignoring it at this point. We lost this level here at 177.50. I mean, it's not cascading or anything, but it is just kind of leaking lower. I mean, it doesn't even look like anything. 4% on a normal chart would, like, oh wow, it had a bad day. But given all this prior damage, 4% hardly even makes a mark. Semis, bad day at the office, 5%. We lost this 223 area, which was really important on the weekly chart. Let me see if I can find that. Here we go. 223 was this big ledge with a void below. Got to get back above 223, or this thing is really vulnerable down into the 206 area. So I would be keying off of that 223 area. If it can bounce back up and hold it, you could try a long for a bounce towards the middle of this big down channel. But a lot of overhead resistance, especially right in here in this, well, we know how important 240 has been, but even before that, there's a lot of traffic right here in the 235 to 240 area. So if you're not in and you see this thing bounce up, whether you're long or not, be careful right in this 235, 240 area. You might be wanting to look for a stall, take profits in that area, and look for it to roll back over, because this thing looks like it's in a pronounced downtrend. Quick run through ARC. Really starting to accelerate to the downside now. This is the ARC FinTech one. I wanted to tell you about a trade that I saw yesterday, and I've been kind of following this guy. You don't know if it's one guy, but you kind of, once you look at these option chains for a while, you kind of get the pattern. Middle of last week, this guy was short. He was in the May 23s, something like that, and he rolled down to the June 3rd 20.5 puts, and yesterday, like 17,000 of them, kind of thing. 12, 15, 20, 17,000, a lot of them, right? One shot, just boom. Yesterday, he rolled down from the June 3rd 20.5 puts. He rolled down to the June 3rd 17.5 puts, and he doubled his position. I think he had 17,000, and he rolled down and bought 35,000 of the June 3rd 17.5 puts. When I thought there was going to be a bounce yesterday and I sent out that note, I had closed some of my ARC stuff. I re-entered that trade, that June 3rd 17.5 put position along with the whale. And you know, that characteristic of taking all your profits, rolling down to a strike, and taking all, not taking anything off the table, doubling up on your position is, in this case, really, really bearish. You see it sometimes on the call side as well, when somebody will take their win, stay long, and double up, rolling all their profits into the next strike higher. But in this case, I'm not going to go off on ARC again, but I think they're coming after it. ARC-G, I'm not in this one, but it's, obviously letting go big time, 10% straight down. ARC-K, 10% straight down. This was the area where I got squeezed out, scared, whatever you want to call it. These bars don't look like much, but they're 10% going against you, right? So, 3 days, going from 46 to 53 doesn't sound like a whole lot, but you see it on your option chain. So, but then got rejected and have moved down, and that's been a great move. So kind of working ARC to the downside. ARC W, all across the ARC complex, just getting liquidated. And the reason being, they either have astronomical PEs or they lose money. And this market is not, that's not going to work in this market. Just like Upstart and Affirmed we talked about yesterday, not going to work, right? Catering to the lowest tier credit person out there is not going to work. And I think Upstart last night, they did a big guide down on their revenue and their loan volume. So anyways, so let's see how today goes, whether they can build on this rally or if people get cold feet and they roll it over and keep selling ahead of CPI. So it'll be interesting for sure. If you're new to the channel, thank you so much for spending time with me this morning. You probably know at this point whether the channel's for you or not. It's 100% focused on technicals. I work hard to give you good objective levels and commentary around those levels on how to trade it, things to think about. I'd like to think that if you come to trust my levels and devote yourself 100% to execution, you'll do very, very well. So that's the goal of the channel. If that appeals to you, please hit the subscribe button, the alarm bell, jump over in the show notes for a link to the blog site where you can drop in your email address, and then morning, noon, night, weekends, anytime I have a thought on the markets, you'll be the first to know with an email in your inbox, link to a video or a blog post or both. We'd love to have you on the team, and you'll also get an invite to our trading room. A bunch of good guys and gals in there. I was so happy last night. Linda doesn't say much, but she's all the time reading, watching, learning to get that upstart 48% rug pull. Had to be a huge win for her, and it's nice to see that in the room. That's what we do. We congratulate each other on our wins. We try to lift each other up when we're hitting a rough patch. And if you've been a trader for any amount of time, trading alone is certainly a lonely place to be. So having camaraderie with other fellow traders can make all the difference, and that's what we try to do in the trading room, and have a little fun along the way. So anyways, hope you guys have a good day trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.